going to depend somewhat on your personal situation. How much do you need to take home to sustain your personal lifestyle? Are you in a high tax liability household or a low tax liability household, right? All of those things do matter. But I'm giving you better and new tools to better be able to calculate those in a way that is going to be very accessible. You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of GreenOak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically. Because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money. Hello, and welcome to Therapy for Your Money. If you're someone who has heard about Profit First, thought about Profit First, kind of sort of started to implement Profit First, this episode is for you. I want to share that I wrote another book. I have the Profit First for Therapists workbook coming out on October 21st. It is available right now for pre-sale wherever you buy books. But I want to share with you today some of the tools that I added in the workbook and really the reason that I wrote the workbook itself. So I put everything I had in Profit First for Therapists, my first book, and all the information that you need is there. But I do realize just from getting a lot of feedback from readers and from the work that we do with my team in the Profit First Academy, that even though we have a lot of information on what to do in the book, there was a lot of questions always around how to do it. And specifically, the instant assessment tends to be a sticking point for Profit First implementation. So a lot of readers, read the book, love the concept, but they just get a little bit stuck at implementation. And so I wanted to add one more tool to our tool chest for helping folks out. So for the last 2.5 years, we have been doing that within the Profit First Academy, where folks can become members. It's no commitment. There's no long-term commitment in the Academy, and they can get one-on-one help from my team to implement Profit First and complete the instant assessment. But I wanted to have maybe a little bit more accessible tool as well. So that is where the workbook was born. So in the workbook, I showed another new option for how to complete the instant assessment. And I added a brand new tool. So that tool will be available in the workbook. It's only available in paperback, and it's meant to be held. It's meant to be written in. I actually recommend that you read it with Post-its so that you can mark the pages that you're going to refer back often. But it's really meant to be a tool that you're going to use heavily. So there's a new item that you can use within that workbook that is using your bank statement in order to complete the instant assessment. So one of the things that I realized after writing the book and just based on the feedback is that many either new practices or smaller practices or even sometimes large group practices, they don't have reliable financial reports or they're not accurate. So sometimes they are doing the bookkeeping themselves, and that means that sometimes it's inaccurate. You are not an accountant. You don't necessarily know everything. Hopefully you are getting help from a professional tax preparer at the end of the year to make sure that things are right. But like in the middle of the year, they might not be right. There are things that are not quite correct. Or sometimes maybe you're not getting those reports reliably. So if you are working on something today or wanting to work on something, you might not have financial reports for last month or even last quarter. You might not have access to that. And so that's where the bank statements come in. So you would use your bank statement and credit card statements for the business for last month. You can use a longer period if you want, but generally using last month can work well, as long as it's not like a crazy month that is not representative of what it typically is. As long as it's kind of a mostly average month, you can use your bank statement. You'd use the bank statement and credit card statements for one single month. And you'd use that to complete the instant assessment. So we're looking specifically at what transactions happened last month. And then once you do that, once you work through the exercises, you are making adjustments for annual expenses, for estimated tax payments, for things that may not have happened in that specific month, right? Because you're not necessarily doing all of those things in that month. So this is a brand new way to complete the instant assessment with something that I know you have. So this is a brand new tool for completing the instant assessment with something that I know you have. As long as you have a business bank account, you have a bank statement. If you have a business credit card, you have a credit card statement. And even then, it's not completely necessary for those to line up perfectly. So your bank statement for your business bank account might be from the 1st to the 31st of the month, right? That's typically how business bank statements work. And your credit card might be for the 10th to the 9th. That's okay. Just use 1 month, because 1 month is going to give us that little slice, is going to give us enough information to complete the instant assessment. So you are going to use that to complete the assessment. And then I also am presenting 3 different options for how to calculate profit. This is another area where people are getting a little bit stuck, and they're tending to use their profit that's on the profit and loss, which is incorrect. That's too much, right? Your profit has some heavy lifting to do in the business, or at least the profit and loss profit. It is going to pay down your debt. It is going to be used to provide for you, right? So whether it's draws or distributions, that money is used to pay you. And it might be used for reserves for the practice as well. And so using the profit first profit, or the profit and loss profit, is not going to be accurate. So I'm presenting to you in the workbook 3 different ways that you can calculate profit. So there's one for if you have already been using profit first and it's working really well for you, you can keep the way that you're calculating profit. If you are brand new to profit first, or if things are not going great, right? You've been using it, but it doesn't feel like it's working well, I have another way for you to calculate profit in profit first. And then third is, if you have a significant amount of cash reserves, I have another method for you to calculate profit. So depending on your specific situation, there are now more options for you to calculate that profit first profit allocation, right? How much is going to go into that profit account? There's a new calculation for that. So there are 3 accounts that directly benefit you, the owner, in profit first, and that is the owner's pay account, the tax account, and the profit account. And so how you're going to distribute allocations between those 3, it's going to depend somewhat on your personal situation. How much do you need to take home to sustain your personal lifestyle? Are you in a high tax liability household or a low tax liability household, right? All of those things do matter. But I'm giving you better and new tools to better be able to calculate those in a way that is going to be very accessible. And so Profit First for Therapists workbook is available on Amazon, Barnes & Noble, most places that books are sold, only available in paperback because I want you to write through it. And if you pre-order the book for a limited time, we will give you access to a special book club that is going to be available only for folks who pre-order the book. So if you have pre-ordered the book, you just need to go to profitfirstfortherapists.com/book club. And you can, with your proof of purchase, register for the 3-week book club that we will be having in the fall for the Profit First for Therapist workbook specifically. So you get to work with me specifically for 3 weeks, and we get to work together as a group towards our instant assessment and some of the other exercises that are in the workbook as well. We did a book club in the summer. It was just such an amazing experience. I love book clubs. I love being around other people and working through things together. And it was just that warm and fuzzy feeling that you can expect from a book club where like everyone has a shared purpose and is working towards the same thing. So I would encourage you, if you're interested, to pre-order the workbook and register for the book club so we can get to hang out in late October and November and work on some of the Profit First concepts together so that you can get ready to finish the year strong and start 2026 strong as well. That's all for today. I'll see you next time. That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast, and don't forget to subscribe to GreenOak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.